Good evening, viewers. We welcome you all to the final lecture of the Spotlight Stay at Home series, keeping up with our aim of inspiring, energizing, and helping the student community. We have with us today Dr. Raghuram Rajan. Dr. Raghuram Rajan is the Katherine Dusak Miller Distinguished Service Professor of Finance at the University of Chicago. He was the governor of the Reserve Bank of India between 2013 and 2016, and also the chief economist at the International Monetary Fund between 2003 and 2006. During his tenure as the chief economist of IMF, Dr. Rajan rightly predicted the impending global economic crisis of 2007-8, making him one of the very few in the world to do so. He received the inaugural Fischer Black Prize in 2003, given to the best finance researcher under the age of 40. In 2016, Dr. Rajan was chosen by the Time magazine as one of the 100 most influential people in the world. His book, Fault Lines: How Hidden Fractures Still Threaten the World Economy, was awarded the Financial Times-Goldman Sachs Prize for the Best Business Book in 2010. We are really honored to have you with us, sir.
Thanks for having me.
Thank you very much, sir. We will now proceed with the questions. So it seems that you were initially interested in studying economics at the very beginning, which is evident from your interest in joining an economics program at the St. Stephen's College. But then why did you have a change of mind in going to IIT?
Well, since I'm speaking largely to an audience of IITians, let me say that then as now, the IITs were, the most rigorous and most sort of attractive universities in India. And they also had a very rigorous entrance exam, as you well know. And it's probably much more rigorous now than it was in our time. We had only one exam, not these two stages. And having studied very hard for the exam and having a decent rank, I fell into the the group think of saying, I've invested the time and the money, I should now go and do it. And I think the IIT Delhi I was in was a great experience. I met some of the smartest people on earth amongst my classmates and amongst the professors, and I learned a lot. But it wasn't really what I wanted to do. I found out as I went through the courses that perhaps I was more interested in how people behave than how electrons behaved. And so that sort of explains the shift eventually. But I have no regrets. I loved my IIT days.
Okay, so also during your program at IIT, you were also heading the Students Affairs Council, which was considered to be a prestigious position. So how did that impact your leadership positions in the future?
The IITs are an interesting, and here I don't know what the current situation is, but IIT politics was very fiercely fought. And so there were lots of factions. There was the PG postgraduate faction, which had its own sort of beliefs. There was the Marxist faction. There was a more right-wing Hindutva faction. It was very interesting navigating IIT politics. But what was true then, and I hope is true now, was it was all peaceful. And there was really no money involved. It was more intellectual jousting, and people planted knives in each other's backs. But these were literal knives, not actual. These were not literal knives, but metaphorical knives. It was an interesting waking up on the political front.
So moving on towards your kind of opinions. You have always been advocating for giving financial markets a greater role in the economy, as well as deregulating them. So could you please explain about why financial markets play a key role in any economy? And also, why do we see such an instantaneous impact on the financial markets based on some decisions taken by the government or even the central bank?
Yeah, I mean that's a good question. Financial markets, to some extent, are the brain, if you will, of the economy. Because when they work well, they're supposed to allocate resources uh, to the right place. Now, what is important to note is that the hands, the companies, the actual industrial corporations, the mining companies, the steel mills, the retail companies, these are the companies doing the actual work. But what the financial market does is it allocates resources to them, and if they're doing badly, it takes away resources from them. So, to some extent, that is the primary function of the financial market, and it's like the brain. It tells the hand to pick up, or it stops the hand from picking up, and it's critical. When the financial market doesn't allocate resources or stops allocating because a large part of the financial market freezes up, say the banking sector is under stress and stops allocating, then you start seeing problems because the vital resources aren't flowing to small and medium companies. They're not flowing to the large companies, and they cannot operate. And so when you have a financial crisis, it becomes a source of deep and long-term economic disturbance, which is why it's very important to make sure the financial markets work well. Now, the financial markets should work on the principle of, is it profitable to put more money here or to take away money from it and put it elsewhere? It's important that they not operate under political direction, because the political desire to put money is different from what makes economic sense. Where am I going to get more value added versus where am I going to get more votes? Those are two different decisions, and it's important that one not dominate the other. So you see that in countries where the primary or the large part of the financial market is dominated by government firms, sometimes decisions are not made as economically in an economically sound way, and that creates problems longer term.
Thank you, sir. So you were one of the few economists who had rightly predicted the impending financial crisis of 2007-8 way back in 2005 in the paper titled "Has Financial Development Made the World Riskier?" So what, in your opinions, were the key indicators which were signaling this impending crisis?
Again, a very good question, and shows you've done your background reading. Well, that's congratulations. That it's interesting that sometimes that doesn't actually happen. People don't do the background reading for interviews. So thanks for preparing. Look, I think the big issue there was really that. There was a sense that risk had disappeared, and this was what macroeconomists called the Great Moderation. But you saw it in financial firms. There was a sense that banks were much more safe. They were much more profitable. And the issue was why were they looking so profitable? They in fact were willing to lever up quite significantly, and what was really going on? And initially, my sense when I started writing that talk was, they're managing it much better. But you can manage some risks away, but you really can't manage all risks away. They have to be born. It's like the law of conservation of momentum. Or conservation of energy. It sort of changes form, but it is there. It cannot be diminished at some level. So the question is, who was bearing the risk and how was it being borne? And as I thought through it, it seemed as if the reality was the financial sector was bearing the risk, but in a different form. It was what was called tail risk, where you make a lot of money in good times by essentially writing what is called insurance or puts. In case bad times happen, there'll be huge losses which you will bear. So you're taking on the losses of the low probability bad times, and in return for that, generating huge premiums in good times. So you look very profitable, you look wonderful, like just like insurance companies. Insurance companies before a catastrophe look very, very profitable because they're earning all their premiums, they're not paying anything out. But the reason they're earning premiums is the insuring you against the catastrophe. And when that happens, they pay out a lot and they look much less profitable. Right? That's exactly what happened to the financial sector as a whole. They were writing these premiums, taking on risk, but it was tail risk. And in good times, they look very, very healthy. But in bad times, all the leverage as well as the risk came back to roost. And because the government couldn't allow those firms, the brain, to collapse, it had to bail out the system, which created all sorts of public anger.
Traditionally, the chief economist of IMF used to be a macroeconomist. And when you were asked to join, you famously remarked that you don't know any macroeconomics. So how different was that role from the previous one? And as in, did you have any challenges that you had to encounter while going through that
Well,
role?
I mean, life is full of hopefully new challenges, and you figure out how to sort of deal with them. And if your life doesn't have any challenges, you should think about creating some. So with the IMF role, I was a finance professor at Chicago, and finance is a branch of economics, and I of course had done macro courses at MIT, but I hadn't really done any research in macroeconomics. Uh, I'd done research on growth, but not really monetary policy and so on. So I had to pick up all that. The reality is, if you're willing and open, you can learn anywhere, and you can learn at any time. And it's important to understand what your strengths are. So I did bring, and that was a reason I was hired, was to bring finance into the IMF's thinking, because that was a blind spot. So I did focus on bringing that, but I also picked up what I was supposed to know as a macroeconomist. So, I think the IMF was both an important place where you could spread your ideas, but also an important place to absorb ideas. And I think that's important. Always be open to learning wherever you are, because you will definitely learn so long as you know that you have to.
Yes, sir, that's really true. So one of the major reforms brought in by you at RBI was the cleanup of bank balance sheets under the asset quality review. But several banks were reluctant to do so, as it would show up as an increase in the bad loans or the non-performing assets. So why did you consider this as an urgent requirement back then? And how does it ensure that the banks function more efficiently?
Well, the problem when banks have a lot of bad loans on their balance sheet is that they become very risk averse. Rightly so, because they don't want to take on more risk, adding to the additional risk they've taken, and they stop lending. And one of the things you could see clearly in the data was that as the public sector balance sheets were filling up with bad loans, which they weren't recognizing, they knew it, we knew it, uh, and they knew that there would be a day of reckoning. So what were they doing? They were stopping lending. You look at credit growth and you compare the public sector credit growth with the private sector credit growth, it was falling steadily. And so the notion was, unless you fix this problem, you would have a huge part of the brain, in a sense, non-functional. It wouldn't be able to direct resources elsewhere in the economy. So I knew that we had to clean up. The question was how fast to do it, and really we tried to pick a pace which would be, do it rapidly, but not so that you will overtax the system. They should start resuming lending and so on, but start fixing the problems with the old bad loans they had made. Unfortunately, we didn't finish the process, and I think it has dragged on far too long. And as a result, unfortunately, we have not been in the best position to deal with this new crisis, the pandemic. In fact, credit growth just before the pandemic had slowed again significantly, and that has been my view, that just postponing recognition of the problem, especially in reasonable times, is very problematic, because you store up the problems for the bad times, and the bad times, it's the worst time to actually deal with the problems, because you've got so much else happening. So it is an unfortunate um, it is unfortunate that we did not clean up.
Thank you, sir, for that insightful answer. Another initiative which we started during your tenure was that of payment banks and small finance banks, which were aimed at providing banking services to the rural areas and those who have been traditionally deprived of banking facilities. So, how successful do you think this attempt has been?
Well, I think the idea was to give new ways of entry to institutions that could not come in with a full-fledged banking license as a universal bank, but could show regulators and supervisors that they had abilities in other areas, but also in the payment bank area to bring in telecoms, which we believed had access to people all over the country, and could be ways that money could come in and out of accounts, but who did not necessarily have the same capabilities as banks in lending, or in doing risk management, or analyzing the customer and their KYC, know your customer norms, etc. So our intent was to broaden the set of institutions, but not allow these entities to ramp up risk quickly. I think the small finance bank there are some very good successes there, even though they have been hit a couple of times by events. Demonetization did hit small borrowers in the informal sector significantly, and as a result, that created some problems for small finance banks in their business. But also, since then, we've had fairly slow economic growth, and now the pandemic, all of which have been blows at the fledgling stage of the small finance bank. But I think the story there is of some significant successes, and I hope that having been through these shocks, they come out stronger, and over time can develop into larger entities serving small businesses, having a culture of working with the poor, or the small. The payment bank was more as a way of getting access to people and increasing the quality of the payment infrastructure. Now, the question was, can you make money in it? And the only way to make money is to be super efficient, but also make the payment bank a part of a larger ecosystem that you are working with, whether it's an online platform for purchases, or other, or whether it's part of your, you make an alliance with a bank and you share with the bank data over time on who is a good credit, because they have used your payment bank to make payments very effectively. So the idea again was inclusion, because we wanted to focus on the smaller accounts, but the idea was also to give people access. So take somebody who's living on a hilltop. The nearest ATM is 10 miles away. They have to walk down the hill to go to the ATM, take out money, go back up the hill. Instead, one, could they take out money from the local telecom kiosk where they buy their SIM card? But second, perhaps they don't need to use money at all if they can use their mobile phone to make payments. So a big part of the payment infrastructure was, could we get people who would start focusing on more automatic payments from the accounts they held with you, from the wallets they held. And so we included people like Paytm in that first round of licenses. I think we have to wait and see. But the important thing was it sort of catalyzed the system into paying much more attention to these issues. The banks went out and joined the universal payment interface. Many of them have apps now. I hope you use your UPI interface to make payments. So that whole payment infrastructure was invigorated by the payment banks, and in the longer run, I think that was the main purpose. Let's see how many sort of develop, but it's sort of an experiment. We're still, I think, don't know the end.
So we sincerely hope that it turns out to be quite successful. So during every budget, the working middle class looks up to the government for relaxations in income tax. However, you have been of the opinion that there should be no further cuts in the income tax for the middle class. But if we see in terms of your famous dosanomics, the common man would feel that by having a greater savings from income tax, he would be able to buy more dosas. So how do we convince the common man that he'll be able to get fewer dosas? Or like, is it that there's some other thing which is going behind it?
Look, there is no substitute for growth. Growth in incomes, growth in jobs. You have to feel better in a country because that is available. You have a better job. You have a more remunerative job. Now, in other words, the only way to improve people's lot in a country is to grow the pie. Of course, when the pie doesn't grow, we focus much more on redistribution. Can I get a bigger share of the pie? But then my bigger share of the pie comes at somebody else's bigger share of the pie because the pie is constant when it's not growing. And unfortunately, that's the kind of situation we seem to be going into, where the pie hasn't grown. And more people feel put upon. I'm paying taxes, but I'm not getting a strong, healthy growth in my income. And so, can you give me another tax break? The reality is, as you know from the government's statements today, it doesn't have resources either. Our fiscal deficit, will be 13-14% of GDP if you count it properly across state and national government, and you make the adjustments the pandemic requires. That's a huge deficit. Who's going to pay for it? If the middle class says I won't pay for it, well, the poor can't pay for it. And there's only so much you can tax the rich before they hide their money and take it away in different ways. So really, we have a reasonable tax rate. It's not overly oppressive, and the way to generate more happiness in the middle class is to create growth. There is no alternative.
So to measure the economic status of a nation, a parameter often used is the GDP or even the per capita GDP. And sometimes we use the purchasing power parity for comparing between different countries. But however, none of these parameters cover the welfare of each and every individual. It's moreover a sort of running average. So is there any parameter or approach which can encapsulate this disparity so that we can work upon it to improve the welfare of each and every individual?
It's a great question again. People have tried. As you know, Bhutan focuses on some kind of a national happiness index. The reality is that you're absolutely right. There are many problems with GDP. I think Paul Samuelson or somebody made the quip that if you marry your chauffeur, GDP goes down. Why? Because now your chauffeur does it as your husband and or wife, depending on whether the chauffeur is a man or a woman. and GDP goes down because now they're doing it as an in-house thing and you don't pay them for it. While if they were your chauffeur, you would pay them for it and it would count in GDP. So that seems like silly because the same services are being provided. And similarly, if I look after my children and my neighbor looks after their children, and we decide to exchange work, and I look after their children, they pay me, and they look after my children, I pay them, GDP goes up because now there's a monetized transaction, even though we're worse off because the wrong parent is looking after the wrong child. My kids would be happier, hopefully, with me looking after them than the neighbor looking after them. So that's one problem. The other big problem, so a lot of homework doesn't get monetized in GDP, and that's more problematic for developing countries because more women stay at home, and so their work doesn't get counted. In industrial countries, they do work outside the home, and they buy more professional help for helping them inside the home, even though the net output may not be that different. GDP is higher, so that's one issue. The other issue is bads, pollution. I build, a car, but in the process, there's a lot of pollution which takes place, and I don't count that in GDP as a negative. I just count the value of the car as the positive. And there are other issues like that with GDP. Now, I think the reality is you must recognize GDP is just one number. It is an important number because it does measure how much more activity there is, but we must recognize what goes into it. And sometimes just maximizing GDP while you let the environment crumble, or you bring more people into the workforce who perhaps should not be in the workforce and might be better suited to, might add more value by not being in. I mean, those are issues to think about. But I think that rather than substitute it with another index, instead recognize there are multiple aspects of economic well-being we should look at and use multiple indices to measure that.
Thank you, sir, for those insights. The banking system is often considered as a nervous system of the economy. So if we look at India's position, we have one of the largest economies in the world. However, if we look at the banking sector, there is only SBI in the top 100 banks of the world, while there are several other from other smaller countries. So is this a cause of concern? And if so, what can be done to improve it?
I don't know that it's a cause for concern. I think there are, in the US, for example, there's a reverse concern. We have a few really huge banks. In fact, this is even more of a concern in the UK. There are some banks whose balance sheet size approaches the GDP of the United Kingdom. And so their worry is that if any of those banks get into trouble, the call on the UK's purse is huge. And so they're worried about having not just too big to fail entities, but too big to rescue entities. And that becomes really problematic. So I would not be overly worried. I mean, we just did some bank mergers also in India. Large banks are difficult, complex beasts to manage, and I don't know if we have the capabilities to manage them that well right now. And we have to wait and see how these bank mergers develop. So I would not put entering the top 100 banks in the world as a policy goal. Instead, I would ask, are the needs of industry being met? There's some places where larger banks can help meet the needs of industry better because they can take larger positions. Of course, consortiums of banks can do that, but it may be the consortium cannot pay as much attention to the loan as a few larger banks doing appropriate due diligence. But what is important is large banks enhance their capabilities to evaluate loans, increase their technological capabilities, increase their financial capabilities. If large banks make loans the same way the small banks do without additional capabilities, they create more risks for the system. And finally, I would say there's a cost to having large banks, which is that large banks don't pay as much attention to the small guy. This is actually well established in research that I've also done. And so that's why having an ecosystem of small banks is also important, which is why we created the Small Finance Bank. You need both. You need large banks to take care of the demands of the largest player to be able to manage that risk, but you also need small banks to take care of the small guy who doesn't, feel comfortable dealing with a large bank.
Okay, thank you, sir, for that detailed explanation. Talking about the current pandemic, the World Bank has termed the present global recession due to COVID-19 as one of the worst since World War II. So, what, according to you, is the best strategy that should be adopted by nations across the world so that they can put their economy back on track?
It's a hard question because different countries are at different stages. They have different capabilities. Almost surely, to bring the virus under control makes it much easier to run the economy. To have a growing virus, an exploding virus, exploding infections, is probably not where any country would like to be. And so I think figuring out ways of tackling the virus to contain the infections is obviously task one. And poorer countries, emerging markets are discovering that maybe closing down the economy is not feasible for the time. And given the extent of actual distancing that takes place at home or in the basti, it's probably not easy to to prevent the spread of the infection as industrial countries have done. But whatever measure we pick, we have to ensure that we are having success in quelling the spread of the disease of the pandemic. My sense is, this belief that we will reach herd immunity will mean many more deaths, if that's the objective, than trying to sort of slow it down to a low pace and hope that a vaccine comes fast enough that much of the population can be vaccinated. But I'm not an epidemiologist. I hope people across the world are thinking of the best way to deal with the virus. The bigger issue, to my mind, is the damage it does and the scope for recovery. Many industrial countries have spent enormous amounts of money trying to protect the small and medium firms as well as protect households against damage. So much so in the United States, the poorest households actually have more income during the pandemic close downs because they're getting sort of topped up unemployment insurance than they would have in their regular jobs. And so spending has not slowed significantly, and in fact savings is up. In India or in poorer countries, the ability to make up the lost earnings is much weaker. And so we've had, a number of tragic sort of situations, migrants not having any income, walking back to their villages, and so on, which neither helps contain the pandemic, but also is a humanitarian issue. And this is true of other countries across the world. Many people in the middle class have slipped back into the ranks of the poor because they haven't had support. So this is an area I think we should look at very carefully. Can we afford to support the relatively poor? And in my view, the amounts that are involved are not huge. And this is important to keep body and soul together during this process, especially the longer the loss of jobs, the shutdown continues. The second is small and medium enterprises, how to protect them, because many of them don't have any business. Many of them don't have much in the way of financial reserves. and many of them will close down permanently unless there is some way to revive them post-crisis. So we need to think about that. Again, you have, given that you have few resources, you have to be very careful as an emerging market to direct it to the most viable companies, not every company. And how do you pick and choose what objective way? I think that based on past tax payments, that might be one objective way because you have a record of what they did. But there may be ways to think about that. The last thing is, even if you repair the economy, you need to help it recover. And for that, typically countries spend a lot in stimulus. When you have large budget deficits and you worry about spending too much more, the kind of stimulus that the government can create may be limited, in which case you have to rely on stimulus coming from outside, which is why I think at this time it is very important the developed world keep trade open, keep investment open, so that the emerging world, the poorer developing countries in Africa and elsewhere, can benefit from the growth of the industrial countries and come back to some semblance of normalcy.
Thank you, sir. So, as you rightly pointed out, the upper middle class is quite safely working from home without much impairment, while the pandemic has taken a toll on the migrant workers or even the rural areas. So, is there any strategy, or what, according to you, should be the best strategy to make the rural areas self-sufficient so that we don't avoid, so that we can avoid the risk of a surge in cases by making the people localized to a particular region or so?
So I think rural India is, as far as the numbers suggest, is doing reasonably well because the harvest has come in is a good harvest, and there is this sufficient amount of social distancing possible, and the virus hasn't spread as much as it has spread in some urban areas like Delhi and Mumbai. Of course, if it gets there, it's important to contain it, and this idea of trying to look for hotspots and trying to do selective lockdowns, I think makes sense. The real problem, in my view, is for the urban poor, who, if the city is locked down, don't have access to jobs. And the rural poor have Manrega that they can go to, which is proving to be an important source of social insurance. The urban poor don't have anything similar, which is why many of the migrants in the cities, knowing that they really had no access to jobs or incomes, left. At least back home, there would be a village community to look after them, but also they would have access to Manrega and so on. So I think we need to, especially if the lockdowns carry on, need to look at what is happening to the urban poor and find ways. I mean, as you said, in many neighborhoods, the upper middle class basically say, we don't want our help coming in because we don't know where they have been, but that deprives them of livelihoods. And the question is, what is to substitute for that livelihood? And there are many people like that who provide ancillary services in the city who really need some help, especially if this continues.
So we would be now taking a couple of audience questions. So you have often talked about direct cash transfers to spur the demand in the economy. So is this the right time to give cash to people when the general tendency will be to avoid monetary spending? As in, what are your views regarding this?
Well, I think that if somebody has to feed their children, you give them a cash transfer, they actually feed their children. I think people have talked about savings going up, and therefore that's evidence that they don't need the money. I think that's probably not looking at the entire picture. In a time of great uncertainty, you may have families skipping meals in order to keep some aside because they don't know how long this is going to last. Those kinds of precautionary savings should not be taken as they have plenty of money and you're just giving them more money to save. If you target your transfers well to those who are in desperate need, they will spend the money. And I don't see this as it's a backdoor. It certainly will help increase demand, but I don't think of that as the primary reason. I think of this as both humanitarian as well as it makes sense for a country to look after its poorest and to make sure they don't suffer. It also makes good economic sense that if you have migrants coming into the cities and they know they will be reasonably treated in bad times, they will continue coming to the city, which has the labor that has the need for labor, but it is also that they will believe that they are part of a country which cares for them. If you treat them poorly at this time, well, first, many of them have gone back to their villages, but how many will come back knowing that they will be poorly treated? What will it take to get the reverse flow of migrants? And I'm sure there will be some. They will want to get jobs once again, but it's going to be a harder slog to attract them back. So from a humanitarian perspective, from an incentive perspective, from a citizenship perspective, I think it just makes sense. And of course, it's a stimulus, but that's the least of it all.
So how do you think India can achieve self-sufficiency and become an export-oriented economy, as in the long run, if we talk about?
The two are contradictions, and that's what a lot of people don't understand. That you do not become an export-oriented economy by first saying self-sufficiency. I'm going to produce everything internally. Countries that are successful in exports import what they need. Because if they try and produce everything, they become overly expensive exporters. And so I think it's important, and this very learned people in the public dialogue don't understand, that the more barriers you erect to imports, the harder you make it for your exporters. Yes, there is value to being sensible on your tariff structure, but typically having a low tariff structure to inputs makes it much more possible that your exports are competitive in the global arena and they will do well. So if you want to be a strong exporter, paradoxical as it may seem, you also have to be a strong importer. You have to reduce the difficulties people have in importing relevant pieces. And it also creates the competition that makes your internal suppliers, puts them on their toes, and they become more efficient. I mean, we have an extraordinarily productive ancillary industry in cars, but they didn't get that way when we had all the protections for the car industry. It was probably before you were born, but we used to have the Ambassador, the Fiat, and the Standard Herald as the three cars you were allowed to buy. We didn't have any ancillary industry there because we were totally uncompetitive in making cars. We were protectionist, and our cars cost a lot, and they were really way backward in technology. It was when we opened up, our old car industry got wiped out, but we had a really strong ancillary industry in Chennai, as you know, where many of these car firms, Hyundai, etc., employ people from the IITs. These came up only when you opened up, and now they are exporting to the rest of the world. Did Ambassador export anything? Nothing. They started a small export business as antiques. They were exporting antiques to the rest of the world because our cars were so old. So look, the reality is self-sufficiency and exports are contradictions.
Okay, thank you, sir, for that very insightful answer. So, what are your views on the universal basic income policy? And do you think it makes sense for certain countries to adopt that?
I think no country in the world is rich enough to have a really sort of untargeted universal basic income. That's one. Second, I am not sure that people are happier when they're paid to stay at home and do nothing. Uh, I would rather that if you were to pay some segments of society because they really have no capability of getting a private sector job, you create public sector functions that they have to do. And countries like Denmark, which have more of sort of a bigger government, tend to ask people who are, to work on local government jobs. Some of them are tour guides. Some of them will be helpers in the local schools. I think a job gives people a sense of identity, a sense of belonging, and it's important to not deprive them of it by essentially paying them to do nothing. Uh, I think that it is useful in some situations to offer cash transfers to the very poor so that they can subsist, so that they can maybe pay for education, they can pay for health care. And so targeted transfers, I think, may be warranted, but there has to be a way out of it, that you give people a path to climb out of that situation of dependence. And therefore, much of this should be focused on them building capabilities. Are your kids going to school? Because you don't get the transfers if they're not going to school. Are they going? Are they getting their vaccinations? Are they? I think so. If you look at successful programs of transfers like Bolsa Familias and the Mexican transfer, this Bolsa Familias is the Brazilian one. They typically are not unconditional, uh, and there are ways of getting people out of poverty. So keeping people in poverty is not the objective. And, to my mind, any sort of system of cash transfers has to think of how you do that without creating a huge bureaucratic system, et cetera, et cetera. But that should be the objective.
Thank you, sir. We'll take one more question from the audience. Increased government expenditure during these times will take a high toll on the government debt. How do we mitigate the danger of this high debt?
It's a good question. I would say, you're caught between the devil and the deep blue sea, right? The devil is damage to the economy. The last thing you want is a damaged economy where a lot of companies have closed because they simply have too much debt in the company. A lot of people are hurt because they could not eat enough during the crisis. A lot of children have grown stunted because they didn't get proper food during the process. And of course, there's a lot of social anger which you've created over this time. So that is the downside of spending too little. Spending without thinking about what you're spending on, just writing blank checks, increases the level of debt, and that has to be paid down eventually. We don't have the capacity to run 150, 170% of GDP as debt, like some industrial countries do. So I think the middle ground is to spend on what you must spend on, to prioritize the spending and recognize that a damaged economy is in nobody's interest, but also have a plan to bring down the debt once things normalize. So spend now in a situation of emergency. Nobody's going to give you additional points for maintaining your credit rating if your economy sort of collapses. At the same, and in fact, your credit rating agencies will be looking at whether you have a strong economy to give you a reasonable credit rating. So protect the economy, but also have a plan to bring down the debt over time. And that means doing a number of things, including becoming more transparent about your budget, telling the truth as opposed to obfuscating what's truly being spent by the government. And that gets us into trouble because we don't know the true extent of the deficit. And then when difficulties come like the current one, we don't have money to spend because we've spent it, but not actually recognized that spending earlier. So be clean on the deficit, be transparent, and find ways to cut back. We have to tighten our belt going forward, but find reasonable ways of reducing the wrong kind of spending and repurposing to the right. We need more efficient government. That makes sense. We probably need more efficient taxation, but I would say spend on what you must now.
Thank you, sir. So, as a concluding remark, what is the message that you would like to give to the college students who are watching this program, especially to the ones who have just graduated or are about to graduate in a year or so?
These are tough times, and I know it doesn't help many of you when you're told this is the worst crisis, certainly in India, but across the world since the Great Depression. These are tough times. But in tough times, there is opportunity. There are new ways of doing business that emerge. There is an openness to new ideas because the old ideas have gotten us into this pass. So what can we do to make the world a better place? It may seem like there is really no scope for that dialogue because people are overly focused on the here and now. But this is also the time the world sort of becomes more eager to listen for better answers. For many of you working in technology, certainly improving the quality of healthcare in our country is an enormous issue which has been highlighted by the pandemic. How do we make it possible for everyone to get access to healthcare? When you're talking technology, telemedicine. There's a lot more telemedicine going on now than there used to be. How can you partition the activities of a doctor so that there is a sufficient amount of telemedicine across the country, that people in remote areas can get access to a doctor in Delhi? At the same time, that doctor has access to their vital statistics, what is going on in their pulse, their et cetera, et cetera. How do you create a system that can offer easy access to healthcare to most of our citizens at low cost, while using technology and using our current or changing our current infrastructure? That's an entrepreneurial job. Many of you, have the capacity to do that. But you can think of this. I just came before this, I was at a governing council meeting for CREA, the new university we're setting up, north of Chennai, that some of you may have heard of. And we're talking there about how do we use the learning, from the distance learning we are sort of forced into, to reach more people across the country, spread the knowledge, so to speak. So I think that even in these bleak times, certainly I hope with your education, with your capabilities, with what IIT has given you, you still manage successfully over the next few years. But don't give up, don't become disheartened. These are difficult times, they are unique, and things will obviously get better. And for India, I have no doubt that the future, if we do things right, is just extraordinary. But I also think that bad times bring important opportunities. And look around you and see what else can be done that's different. And if you can be part of that, you've made an important contribution to the world. So good luck in everything, and use the friends, your professors, etc., as you try and navigate the difficult times. But I hope it works out.
Thank you, sir. So your chat was really inspirational and truly insightful. We believe that the audience would have enjoyed every minute of it. We sincerely thank you, sir, for this fireside chat.
Thank you very much, and good luck with everything.
Thank you, sir. We also thank the viewers, and we hope that you had a memorable experience. This marks the conclusion of the Spotlight Stay at Home series of lectures, which spanned over 45 days with 10 lectures from distinguished personalities. We once again thank you for your continued support. Thank you all.
Thanks, Shashank. Bye.
Thank you. Thank you.